Hello, I'm Bernanke from Interest.co.nz and welcome to a special report on the massive US bailout and what's happening and what it might mean for us here in New Zealand. There are doubts growing about whether the bailout will actually pass or fast enough to stop the markets from grinding to a halt. The government has before it a plan by the US Treasury and the US Federal Reserve to use $700 billion US of taxpayers' money to buy toxic mortgage bonds off the banks. Now, on top of the bailouts of Fannie Mae, Freddie Mac, AIG, loans to Bear Stearns, insurance for money market funds, about $1 trillion US of taxpayers' money has been pumped or is about to be pumped into the US financial system and therefore the global financial system to try and rescue it from a catastrophe. To put that in context, that's more than the US has spent in the last 5 years on the Iraq War. It's about $3,000 per man, woman and child in the States. Now the problem is this plan is meeting strong opposition from the politicians in Congress, both from the Republican side and from the Democrat side. Just to give you an idea, the Senate Banking Committee chairman, a Democrat called Chris Dodd, has said, quote, "This is not acceptable. It is not going to work." And overnight there were hearings where both Secretary Paulson and Fed Chairman Bernanke argued for 5 hours in front of these committees that this is necessary to stop the markets from grinding to a halt and from an economic catastrophe. But the politicians don't have a lot of faith in what the US Treasury and the Federal Reserve are proposing. There's been several times before when both Paulson and Bernanke have come to them and said, let us do this, this will fix the problem. Yet months later, sometimes even weeks later, they've had to come back and ask for more money. So this asks the question, should the taxpayer, albeit the US taxpayer, luckily not the New Zealand taxpayer, be bailing out large financial institutions and effectively compensating them for very poor decision making? Are we creating the moral hazard of all time by doing this? And what's to stop, if this is the case, these bankers from doing the same again? And if the government is going to bail out these banks, essentially by buying all their dodgy assets, shouldn't they demand ownership of these banks and stop them from doing this again? Effectively, that's what the government did with AIG. They're going to take an 80% ownership stake for the big loan they were giving them. Now, how are these assets going to be bought? This is a key question. Is the government going to buy them at premium prices to pump as much money into the balance sheets of these banks? Or are they going to buy them at fire sale prices and effectively wipe out not just the shareholders, but probably the bondholders and other bonds offered by the banks as well? Last night, we got the first hint of what the Treasury is planning to do. Secretary Paulson, Hank Paulson, indicated he wanted to play close to book value for some of these toxic bonds. And he wouldn't want to do a fire sale because he said he didn't want to punish the banks. Remember, Henry Paulson is the former head of Goldman Sachs. He is an investment banker to his socks. One watcher at the Senate hearings actually yelled out in the open committee hearing, "The fox is being put in charge of the hen house." He's talking there about Henry Paulson. Now, the government does need to pump cash into the balance sheets of these banks. But if they're going to do that, they should be taking ownership and they should be buying at fire sale prices to wipe out the shareholders and the bondholders indirectly who took the risks which have created so much drama. I'm Bernanke. That was a special report on the massive US bailout plan for Interest.co.nz.